I want to say thank you to everybody who showed up to the live stream earlier. Look, it is a great place if you've got any questions about AMC stock that you haven't seen answered yet, or you kind of just want to see what's going on during the day. We normally go live Monday to Friday around 3:30 p.m. Eastern Time to about 5 to 5:30 p.m. Eastern Time, and it's a great place to talk AMC stock. And look, one of the biggest questions we saw today was what's going on with 007, ICC-007. Is this something we should be concerned about? Should we be happy about it? Could you explain this a little more? So that's exactly what we're going to be doing in this video. We're going to go over an excerpt. We're going to break it down, explain it, talk about it, and really see if this is going to be beneficial for the squeeze. So if all of this sounds like something you're interested in, let's get started. What's up, everybody? I'm Clay. I'm here to make 2021 the best year ever. If you haven't clicked that subscribe button yet, make sure to subscribe to the channel. Join us. Become a bro. We are here every single day, and we're growing our portfolios together. So there's a lot of talk about haircuts, and no, they're not talking about this hair here right here. They're talking about margin. We'll explain that in a second, but let's read over this excerpt and really see what's going on here. As described above, ICC's proposed changes to its collateral asset risk framework in Appendix 6 would refine and update certain risk measures and risk factors for determining collateral asset haircuts that can be accepted from an ICC clearing participant. The proposed changes would also require the risk department to review and update haircut values at least monthly, or more frequently as it deems necessary, and to incrementally update such haircuts during periods of extreme market stress. So the Commission believes that these updated collateral asset risk management procedures should allow ICC to continue to mitigate collateral price and liquidation risk through setting acceptable haircuts and providing governance guidelines for monitoring haircut values and managing any deviations or related issues, thereby continuing to maintain a sound risk management framework in this regard. My goodness, what a mouthful. Let's try to break this down so it's easy to understand, okay? The ICC and these haircuts. What are haircuts? Haircuts are acceptable margin levels, okay? The safer the asset, the more they can be used, and margin is allowed to be used. Leverage. Margin is a good way to, or leverage is a good way to describe margin. So the safer the asset is, think a government bond. Okay, a government bond is a very safe asset. These can be leveraged more because they're all but guaranteed, right? These can be leveraged more than riskier assets. So riskier assets could carry little to no margin value, and that's when the haircut comes into play. The larger the haircut, the less marginable the asset is. Haircut is just the derived difference from the loanable value of the asset to the market value of the asset. So if you were to go out and buy $10,000 of AMC stock and you wanted to take a loan against it, depending on the market value of AMC when you took that loan, if it's deemed to be very risky, they would give you a loan much smaller in proportion to that $10,000. Maybe you would be able to borrow $1,000 on AMC. Well, this is exactly what they want to do here. They want to be able to limit the amount that hedge funds, institutions are able to use on these specific securities that they're out there borrowing at any given time. Not just on a monthly basis, but one of the things I like here is that they're doing it not only on a monthly basis for sure, but they're also doing it based on market volatility. Why are they doing that? Guys, the market volatility that was exposed during the GameStop squeeze and what happened with GameStop back in January, when we saw AMC shoot from $2 to $20, this is extreme market volatility. And what does it result in? It results in these hedge funds that are over leveraged, they go broke, right? They have so much money in their account, but then the amount of money that they lose on these positions is greater than the money that they can cover. Now, what is the ICC saying here? The ICC is saying that we don't want to be responsible for your risky behavior. We do not want to be responsible for closing out your positions for you. We do not want to be responsible for you shorting AMC stock. That's what it boils down to, right? It's not just AMC stock and GameStop that they're really worried about here. Yes, it's the market as a whole. It's all types of securities. But The increased market volatility that stocks like AMC and GameStop are creating for these hedge funds, the risk is real, right? They know that the risk is real. The ICC is making it apparent that the risk is real. What's the ICC saying here? Bottom line, they don't want that risk. Bottom line, that's what they're saying. They want to make sure that the hedge funds are the bag holders and that these clearinghouses are not the bag holders, right? They want to make sure that they're not associated with the risk. And that is exactly what triggers a margin call. It's all risk aversion. Once these lenders and banks and intermediaries between the hedge funds determine that they can no longer handle that risk, that's when you start to see margin calls happen. Okay. Now, does this mean that a margin call is imminent? No, it does not mean that. It strictly means that they are seeing AMC stock, they're seeing GameStop, and all of these other meme stocks, as they like to call them. They're seeing them as very volatile. So they're saying that, yes, you guys can still partake in short selling these shares, but we are not going to bag hold that risk. We're not going to be responsible for the risk you are generating. So if you are willing to short these shares, you have to have collateral on hand to cover these loans, because that's exactly what shorting a share is. It is a loan, okay? They're selling the shares that they don't own. That is a loan. So these hedge funds need to be able to cover the price of that loan. And it doesn't go into too much detail about the size of the haircut. Margin is a very good interchangeable word there. So it doesn't go into much detail about, whether or not they're going to what extent they're going to decrease the haircuts or increase the haircuts, essentially. Decrease the margin, increase the haircuts. It doesn't go into extent of the actual numbers. But what it means in a nutshell, bottom line, is that they do not want to be associated with the risk. They know that the hedge funds are digging themselves into a bigger and bigger and bigger hole. Now, here's the beautiful thing, guys. If they're willing to tighten their margins, if they're willing to tighten the restrictions on stocks like AMC, once the hedge funds start to lose out on their liquidity, once the price of AMC continues to go up, and these hedge funds lose a certain amount of money, these intermediaries, they say that's enough. We are not associated with this risk anymore. You have to liquidate so that you can cover your positions, so that we're not stuck with the bags that you are. Now, here's my take on this. Hopefully you guys agree. You might disagree. It's going to be very difficult at this point with such regulations surrounding AMC to see stock prices during the squeeze that would trigger all of the insurance. The insurance is essentially doing their best to say, hedge funds, you're on your own, you're going to cover this, and we're not going to allow it to get close to that. So some of the higher prices that you're going to see are, when I say realistic, some of the higher prices that we're talking about are going to be extremely, extremely difficult if we're starting to take these intermediaries' money, if we're taking the hedge funds' money. The ICC, these intermediaries, these lenders are basically saying you're on your own at this point and it's not looking too good for you. Now, here's what you need to know. If you're wondering why hasn't the squeeze happened yet, what's going on here, the hedge funds have a lot of money, guys. They can move things around. They can clear up liquidity almost at the snap of a finger. They've got so much money on hand. All they have to do to continue playing the AMC game is sell their shares in something else. They know that they're risking this position. They do not want to lose to you. They do not want to lose to me. They're probably willing to risk their entire portfolios at this point just so they don't have to say that they're losing out to people who are calling themselves apes and people who are calling themselves you know the names that you guys call yourselves out there. I see it, right? They don't want to lose to people like that. So they are going to put up a fight. Know that they will put up a fight. And here's the deal. The only fight that you and I have to put up is hold our shares. If somebody else buys into AMC, they hold their shares. And when we are willing to hold our shares and not sell those shares back to the hedge funds, it's game over. The margin call is looking like it's inevitable at this point. Everybody's setting up for it. The lenders don't want to be bag holders. They're saying, hedge funds, you're on your own. It's looking very, very good for us. Doesn't mean it's guaranteed at any point. It's guaranteed that the hedge funds are going to cover their positions. That's what's guaranteed. But they're going to play every trick in the book that they have to make sure that they have all of the liquidity that's required by them so that they don't get margin called. So don't get deterred. Don't get scared if this thing drags out longer than you expected, or if we continue to fight this battle for a long time. It's their ego versus us sitting here and waiting at that point. So that's what we're up against. Hopefully that shed a little bit of light on what the 007 or this ICC-007 rule is and what it means. There's no exact numbers in there, but it's a very good sign that they're willing to adjust the haircuts is what they use, but they're willing to adjust the margin requirements on positions such as AMC stock, not only on a recurring basis, but when the volatility kicks in. The more volatile the stock, the more capital the hedge funds are going to need on hand. So guys, I know this was a little bit of a long video, but hopefully it shed some light on what's going on here. Let us know what you guys think down in the comments below. If you think this thing is inevitable, if you're willing to hold until you see it out, don't get bored, guys. Just don't get bored. Think about something else if you have to. Don't get bored with AMC stock, because it's going to make us a lot of money, and it gets me excited. So I'm very happy about that. I want to know how excited you guys are and how high that you think AMC stock can go, and if you are ready for the squeeze. Let us know down there, guys. If the subscribe button is still red, I don't know why. Subscribe to the channel, turn on notifications so you never miss a video. Like I said, we're here every single day. We're growing our portfolios together. A link in the description below for Webull. We got Twitter, brand new to it. I need some followers over there, really see what's going on, and I'm still learning it, so cut me some slack on Twitter. I'll get there. But until the next time, guys, I hope that each and every one of you have an awesome day.